So the first topic is doing your taxes, which is not the most exciting topic, but I'm going to keep it super duper fast so that it's a little less boring. So here's the thing. Everybody has to pay taxes, and usually your income taxes are withheld by the person you work for automatically, which is very convenient. You pay both federal and state taxes, and the person you work for, your boss, is going to send that money to the government so you don't even have to think about it. It stinks to lose that money, but it's convenient that you don't have to send it yourself. The thing is that there's a lot that goes into doing your taxes, which is what I'll get to in a minute. So let's get some terms defined. The first term is gross income. So listen to this, guys. Okay. So these two kinds of taxes were walking down the street, okay? You ever heard this one before? One looked at the other one and said, "You're gross." And the other one was like, "Yeah, I am." And it's gross income. So anyways, gross income, it's your total income. It's your complete income. So if I work for 10 hours and I earn $5 an hour, 10 times 5 is $50. That's my gross income because no taxes have been taken out. However, we know that we have to pay taxes on our income. And so the amount that is left over after I've paid my taxes, let's say I earned $50 gross, but the government took out 20, then my net income, which is the amount I actually get, would only be $30. So that's the amount that's left over after I've paid my income taxes. Another important term that comes up with paying taxes is the IRS. And the IRS stands for the Internal Revenue Service. And all it is it's just the part of our government that monitors and handles taxes. So when you pay your taxes or when you have to do your taxes once a year, which I'll mention what that is in a minute, it's the IRS that you're going to be working with. There's another term that's very important. Tax deductions. So a tax deduction, if I can move my little face out of the way, does that work? I hope that works. A tax deduction is when you can actually reduce the amount of taxes you're supposed to pay by doing special things. And some examples of the special things you can do are perhaps donating money to a charity. You see, our government likes it when people donate money to charity because charities do good work. And so they encourage people to donate money to charity by saying, hey, if you donate money to charity, you don't have to pay us as much taxes this year. And that's called a tax deduction. So I'm just going to make up some numbers, but let's say I paid $1,000 to a nice charity. And theoretically, don't quote me on this, but the government might say, hey, now you can pay us $1,000 less. So it's like I save money on my taxes because I did something good with my money at a different time in the year. So that's called a tax deduction. Wow, that's a great example that I just spoke through. So there you go. Okay. So people talk about doing their taxes. And what does that mean? Well, here's the thing. When you do your taxes, what you're doing is you're double checking to make sure that you've paid the correct amount of income tax all throughout the rest of the year. And usually people all get this done at the beginning of the year, sometime between January and April. Okay, it's sort of tax season when that happens. And it's designed to make sure, number one, that you've paid the right amount, because after all, the government wants to make sure it gets its money. It's not going to just let you off the hook if you don't pay the money you owe it. And it's also important for you because you never know. Maybe you paid too much. And if you paid too much, then what happens is you'll get that extra money back. The amount you overpaid, you'll get a tax refund or return, which is awesome. It's like money you didn't expect to get. And people take that and they go on vacation or they buy new furniture or something like that. So that's a tax refund. Woo! So let's talk about how you do your taxes. It's the good news is that doing your taxes nowadays is a lot simpler than it was even 10 years ago, back before people were able to really use computers and internet very safely. So, but it all starts the same way. The first thing that you need is a piece of paper, and it's from the person you work for, from your boss, and it's called a W-2, okay? W-2 form. And it might look like this. This is an old made-up one I found on the internet from 2010. But basically what a W-2 form does is it summarizes how much money you've been paid and how much taxes has been taken out of your paychecks all throughout the year. So it's essentially one document that says you earned this much money, you paid this much tax, and that's your W-2 form. So this is a very important piece of paper. You need this in order to do your taxes, and if you lose it, Like, you can get in big trouble because it's going to be hard to pay your taxes if you don't have this document. And so basically, make sure you don't lose it. Okay. Once you've got your W-2 form, you need a couple of other forms. There's one called a 1040 Easy, and another one for the state of Illinois that you don't need to talk about. So the 1040 Easy used to be what people had to fill out. Here's one from 2012. You can see it's a lot of lines and words and boxes, and they forced you to do a lot of math. It was super duper lame. But basically, you used to have to fill out this form and then send it into the government, and they would all double check your math and make sure that you paid the right amount of money. Don't worry about that form. Okay, what else is on here? So you can tell I'm trying to go fast. Yeah, okay, let's skip. So you used to have to take all this information from your W-2 and copy it in, blah, 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 blah. Very boring, lots of math. Aren't you glad that you don't actually have to do this? Aren't I a nice teacher for just skipping through all this stuff? You should say yes, Mr. V. All right, so there we go. So that would be an example of somebody having to owe money. That's bad news. Okay, but you know what, ladies and gentlemen? Good news. Skip that. Good news. This is where we end. We don't live back in the olden days anymore. We live in the 21st century, the age of internet and computers and smartphones. And so what that means is that we don't have to do our taxes on paper anymore. I haven't done my taxes on paper for at least 4 years. Woohoo! And so the thing is that you can use online services to do your taxes. There's lots of them. TurboTax.com, TaxAct.com, FreeTaxUSA.com, H&R Block. You've heard of some of these, you haven't heard of others, but the bottom line is that you can pick a legit, reputable website and you can fill in your taxes online, which makes the process a whole lot easier. So, that's it. Can you believe it? That's doing your taxes. So let's review what we've learned. We learned that every single year, money is taken out and given to the government automatically. But once a year, you have to double check to make sure the right amount was paid. And to do that, you need a form of paper called a W-2. That paper has the amount of money you were paid and the amount of money you paid as taxes. You take that W-2, and you used to have to fill in a bunch of forms, but now all you have to do is go onto a reputable website, complete the steps that it walks you through, submit it, and you're all done. So that's doing your taxes. I probably could have just said that whole summary at the whole beginning and it would have saved you a lot of time. Anyways, thank you for watching. Listen, there's a Canvas quiz about this, so you need to go back to Canvas right now, although you're probably still right there already, and go take that quiz. Once you're done with that quiz, come back, because there's another quick video, very, very brief, about where all this tax money goes. Once you pay all this money, what does the government do with it? That's what the next video is all about. Okay? Thanks, everybody.